Good evening. This is Scott Lowe. It's April 20th, 2010, and I'm sorry that I haven't blogged for over a month, but I've been busy with year end. I'm an accountant, so it happens. You work 78 hours a week. But the last time I spoke was about Citigroup and my investment. It makes up a large part of my portfolio, roughly 40 to 50%. And I told you that I sold off EPD and Frontline, which is an oil tanker. And since then, both of those positions are actually up. Frontline is up roughly 20%, and EPD, which is the oil slash natural gas pipeline, is up a little over 10%. But good thing that I did sell those two positions and got into Citigroup, because since I got into Citigroup, which it was back in March 12th, March 14th, my buy-in price was $3.99, and as of today, the price of Citigroup is $5. Now, yesterday, April 19th, Citigroup came out with their earnings, and they blew away expectations, and their EPS was 15 cents per share. And analysts, they were expecting either break even or less than break even, minus 1 or 2 cents per share. But they just blew earnings away, and the stock, it didn't react the way that I wanted it to, or a lot of investors wanted it to, because of the sentiment in the market, as well as a lot of the news that was going on. There's a volcano that's going on in Iceland, and also the charges against Goldman Sachs by the SEC. Now, the news and the gibberish that this video blog was made for was to cut through all the noise and to go to the meat of the investment. Now, the gibberish from the SEC and the charges from Goldman Sachs, I believe, are completely off base. And when the allegations came out last Friday, the market cap of Goldman Sachs fell by about $12 billion. And the stock price went from 190 to 160. And it's been hovering around 160 now for the past 3 days. And Goldman Sachs came out with earnings today, and they blew away expectations as well. Analysts were expecting around $3 or around $2.50, and I think they came in with EPS of a little over $5 or $4.50. And I think right now is a great buying opportunity for long investors in Goldman Sachs. Now, I probably wouldn't take a huge position. I'd probably ease into the trade a little bit just to see how other investors and what, I guess, more allegations will come out from the government or from other governments, such as the EU. They're looking into the fraud charges as well, to see if some of the countries or some of the municipalities in the European Union were affected by the CDO package that Goldman Sachs put together. But I think that 160 is a great buying opportunity. If it goes 155, 150, I'd probably double down. I don't think that there's really too much more downside risk that we could see from Goldman Sachs. I think that if we were to see just a major sell-off of 20 to 50%, we would have already seen it. And if the most severe allegation was just this one particular incident, which was roughly only $1 billion of, profit to the bottom line of Goldman Sachs, and it's no big deal. But it's kind of like the case against Toyota TM that I talked about previously, about the incident with their cars and how the government, at the most perfect timing, when they're coming out with new legislation, they come out with these allegations against these companies. Now, these allegations against Goldman Sachs is perfect timing for the financial reform that Obama is trying to push through the Congress and eventually the Senate. But it's a great opportunity to purchase Goldman Sachs, and I think that Citigroup right now at $5 has a market cap of 140 is a great opportunity to buy as well. I think that we'll probably see it around $5.50, $6 in the next 6 to 8 months, and I think that if it goes below $5, it's another opportunity to load up on more shares. Now, from now on, my theme that I'm going to be speaking about is energy. I think energy is the new wave of how I'm going to structure my portfolio. I'm reading up on a lot of commodities, how natural gas is traded, how crude oil is traded, and I think that there's a lot of different investments in that whole energy process that we can take advantage of as investors, such as the refining, the drilling, exploration, and eventually the selling of the crude oil or the natural gas or what have you. If you go on yahoo.com and you type in the ticker symbol SPY and then you compare it against another mutual fund, which is VDE, which is the Vanguard Energy Index, you can see that over the period of 5 years since the energy index has been out, it has outperformed the S&P 500, which is the SPY. And I think that going forward, we're probably going to see the energy index outperform the S&P 500 on an absolute basis. And there's a lot of opportunity for those of us that are able to analyze particular stocks and investments within the energy sector to, exponentially outperform the S&P 500, not just the energy index that Vanguard displays. So, sorry again that I haven't video blogged for a while, but if you have any comments or if you want to discuss a little bit more about these investments that I've been talked about, please send me an email, salarbitragegroup@gmail.com, and hopefully I'll be back soon. Thank you.